What is up, everybody? I know this is like 4 days late, and I apologize, but I wanted to get around to the Q&A questions that um, everyone submitted, like 4 days ago. I'm sorry. I got caught up with life and just stuff in general, but now I'm getting around to the Q&A questions, and so there weren't a ton of questions, but a lot of them kind of overlapped and kind of were similar. So let's just get into it and we'll go over it. So, one of the main questions was how to create a pre market plan and how to figure out areas of interest on the day and whether to prioritize longs or shorts. So, I'm a day trader. I normally don't swing anything overnight. So, I'm looking for trends and areas of interest that are in the relative, like, close range of the price on the day. So, this is the daily chart. There are times where, so I will look at okay, when I create a pre-market plan, I'll start out on the daily, and I have my 200 moving average and my 50-day moving average right here in green, the 200s in red. And I'll look at the daily chart just in general and look at the volume to kind of see what I'm seeing. So overall, we're in an uptrend, right? We're trending up, making higher highs, higher lows, higher highs, higher lows, higher highs, and a higher low. So we're in an uptrend, and that's on the daily, right? And then I'll look at the previous day's candle to see kind of what we had. So this honestly looks like a pullback on a hammer, right, with slightly higher volume than the previous day. So kind of showing that, buyers stepped back in as price dipped. Okay. So I'll go down to the 4 hour now. And lots of times what I'll do is I'll actually go to the line chart. Makes it easier to see kind of the trend we're in. And so I don't really care. I mean, I understand that we're in an overall downtrend on the year, right? But I'm not taking these big swing trades where I'm, taking it from the top of, August and holding it down to the bottom of October. I'm taking trades during the day between, 15 minutes to a few hours. So I'm not interested too much in the larger time frame trends. So I'm more interested in these 4 hour time frames, 1 hour, things like that. So go to like the 1 hour and I'll see that, we're in an uptrend. Okay. So if we're in an uptrend, you want to long the pullbacks, long the retracements to go with the trend, right? So I would look at this and I'm looking for trends now. And notice that I have all my charts or all my drawings off. I'm just looking at this naked chart basically. The green dots are the previous day's high, red dot is previous day low. So this kind of gives me a range also to look for, because if we're not breaking out from the previous day's high or low, you're forming an inside bar. And that tells me that, the momentum just isn't there. Usually momentum comes when the daily candles break out from the previous day. So I see that, we pulled up, we ran up, pulled back. So now I'll look for areas of interest. So my areas of interest are usually my support and resistance lines. So I will look at, these are my lines. So normally they are pretty spot on, pretty accurate. So I'll see, where is the closest area of support and resistance. So in this case, if this were the pre-market, I would be looking to say, okay, we pulled back. We're kind of at this large area of resistance now. It used to be support, possible resistance, and we're pulling back. So maybe things that break over this, you would long, or you would look to take a long on any pullback into previous support. So my areas of interest for trades are going to be here and probably here. So maybe if we break down below the previous day's low, we could flush down to this next support area. Okay. Or if we start breaking highs, also something I see is this trend line as well, right here. This is a very nice trend line, and that may also bring in long setups. So I could see something like, let's see, where is something, if we break out of this trend line, maybe we get a pullback here and then we rocket up. So that may be something I'm looking for as well. So I'm basically taking in the levels that I have previously drawn. These levels, they don't move much. I don't really adjust them too much. Maybe if, something overshoots, like this maybe could be pulled down slightly, but overall, we double topped here right at it and then kind of consolidated here, broke under it. It's just a general area to look for. So I'm taking into account the trend on the 1 hour or 4 hour, taking into account the levels that are nearest price and where I can see possible bounces or rejections based on the trend. And then finally, I take into account zones. So I know I need to plot some zones up here. There's probably some in this area, but I do take into account these supply and demand zones. You'll see right here today, we did bounce at this zone right here on the 15-minute. It was pretty much right at the key level. It overshot a little bit, but like I said, these areas are just general areas of interest. Price can overshoot a little bit, come under, but they're more like inflection points in the market and where you want to look to get in short or long. So tomorrow, I would probably be looking for this trend line to break and then for this area to hold on a pullback. So if we can break this, hold on a pullback, I would definitely look to take this long. If we break and we can't hold this, then I would probably short this down to this area. So that's kind of how I look at areas and prioritize my shorts or longs. I basically create if-then statements for every area. So I'll say, if we break out from this zone or this area and come back to retest, then I want to look to take a long targeting, 4,000 right here on ES from 39.60, right? Or if we reject from this trend line, I would look to take a short from 39.60 down to 39.23. So it's a lot of if then statements. And so that makes it so that in the moment when price action's playing out, I don't have to think much because I'm kind of the thought that the more you think and the more you plan in the moment, the more your emotions are going to fuck with you. And the more often than not, you're going to make the wrong choice. So having your trades pre-planned prior to the market, I think is super key. It's helped me a ton in my trading versus going into the market and just winging it. And then these levels here give me areas to look for trades. So if price is right in the middle, I'm usually not going to trade that. If we break this area like we did overnight on strong volume and strong candles down, then I would take that short and target the next area. But if we're right in the middle and I'm just coming to the charts, then maybe I'd scalp it. But if we're right in the middle of these zones, that's not an area that I really want to play. I want to play inflection points on the price chart, right? And so that's kind of how I look for areas of interest, prioritize shorts and longs, and create my pre-market plan. So I would highly recommend getting up, probably an hour before the market open, analyzing what the pre-market's doing, where we're at, and then planning trades based around your key areas that you have marked. Now, they don't have to be mine. I trade off the 15-minute charts for entries and usually look at the higher time frames like the 1 hour, 4 hour, things like that. If you scalp, then you would just shift those time frames down. So that's kind of how I create a pre-market plan and figure out how to take trades. I did get a question on how to use volume profile. So great question. Volume profile is one of my favorites, and I tend to use it to identify strong areas of support and resistance or supply and demand. So what I do is I kind of look at it. So I use the VRVP, which is volume range, volume profile, meaning as I zoom in and out, it shows the volume of every candle that is on the chart. So if I zoom in, I can get the volume profile of just this little range right here. If I want the range of the past, few weeks, I can zoom out and I get the range of the past few weeks. And basically, how I use the volume profile is I'll zoom out and I look for volume nodes. So nodes are volume spikes on the volume profile. So you'll see there's a volume node here, there's one here, You zoom out a little bit more, you kind of see where these volume nodes happen. And so you'll notice that price tends to move from node to node. So if you're here, the next level up, it moves up to here. It can come back down, comes back down to this node, and then we rock it back up to, say, like another high volume node. So you can use those intraday. You can also use them over days, weeks, hours. They're all valid. And so what I like to do is I like to have it up and be able to see my zones and where prices reacted. And I like to see volume nodes that happen at supply and demand zones. So these show me where there's lots of buying and selling activity on the chart. And if I can correlate it to a zone, then that tells me that the zone is a little bit stronger than, say, like your average one that aligns, with not a volume spike. So like right here, you can see that we have let's see, I haven't marked a zone up here, but let me do it. So we got a 4-hour zone like right here, right? In this area. And notice we go straight across, there's a big volume spike right there. So I'm anticipating that this zone right here is going to be pretty difficult to break through. And if we do break through it, we will probably be going to the next level up here. And if we reject it, I would expect us to fall all the way back down here. I hope that makes sense. So volume profile can show you where the most buying and selling activity, the most volume is at in terms of price levels. And if you can correlate zones to those price levels, then you know that those zones are stronger. Kind of like right here, you see we have a volume spike, right? Or a volume node. It sticks out, it dips and comes back out. And we have a zone right here. And notice today we drop down, we hit the high volume node right here, and we bounce back up to this one or close to it. It looks like we're going to touch it overnight maybe. And so that would correlate to a higher quality play. And so you can use it on, the daily. Here you can see these really strong areas of interest right here. We're at a really big one actually right here. So this is kind of where price is at the moment. I know my charts are a little crazy on the daily, but I promise when you zoom into like the 15-minute and the intraday, it looks really clean. So you can see that, this is a really high volume area. So there's lots of transactions that have been going on right here, right at this, right under 4,000 or 39.66 to 4,000 there's been lots of buying and selling, which makes sense because we've had all these days that overlap right here. So of course there's going to be lots of volume there. So that's a big area of interest. And then you drop down a little bit, here's another area of interest, this 38.89, probably 38.99, yeah, like 3,900 area, another big area of interest. Drop down here, this is about 3,800, where this starts, 3,800 down to like 3,770, another area of interest. You'll notice that we bounce at these prices. So that's how I use volume profile. You can use it for targets, but overall, the volume nodes correspond to like support and resistance zones. And if you can correlate those to supply and demand zones based on the candle structure, then you'll have a high quality zone that you can take a trade off of. So there's that. So I got another question. When and where to execute a trade? So this kind of goes along with the pre-market plan. You should always plan out your areas of interest to take a trade and trade them, like even if you're in the moment and you think maybe it's not going to happen, usually your brain, when you're outside of market hours, charting in the pre-market where you're not stressed out with price and you have all these things going on, you're going to be right more often than not. TA is not very difficult. Anyone can do it. It's the psychological aspect and basically embracing the uncertainty of a trade, right? Because you never know if it's going to go in your favor. You can just put the areas of confluence together and then take trades that you think are going to work out. So like today, go down to the 15-minute. So this is the 15-minute. So overnight, we sold off. we were looking for this area to break like the entire week. You know, we tested it one, two, three, four times before we broke it. And of course, it happened overnight. I had a feeling that was going to happen. But we came down, and then we came down to this area, right? So this is kind of an area of interest since we had a support area or a support slash resistance area here. And then we started to consolidate. Um, Now, I also like to look at, so I'll take my trades off the 15-minute chart, but I like looking at, the 1 hour. I think the 1 hour is a great medium time frame to understand where the trend is going and where it could go. So, like here, you got some really big body candles on high volume coming straight down. So you know the trend is down. So then once you see the trend is down, you could get on the 15-minute and take an entry based on the 15. Say you see this like bear flag playing out right here, and then you break it. Maybe you take the break of this at 39.55 or 57, anticipating that once this breaks, because we've held it up for so long, that you're going to flush down to this next area. So that's how like looking at the larger time frames can help you, and then knowing what candle structures mean. So when you're looking at the 1 hour here, you're getting these inverted hammers at the lows, right? And I don't think a lot of people understand or know, but a lot of times when you see these at the end of a trend, whether they're at the top of a trend or the bottom, these indicate reversals. So if you see this taking this long because we're at a key level right here, right? We're hitting support or a demand zone, I should say, and you zoom out, you notice that this is a volume node. So this is going to act as tough support um, and resistance for price to get through. So if this holds, this is going to bounce back up to the next node. And then you see this on the 1 hour, maybe the first hour of the day, you see this inverted hammer right here. You're thinking, okay, uh, this is an inverted hammer at the lows. Volume isn't the greatest, but we're at key level, volume node, demand zone. Overall trend is up. So this is a pullback, and now we're thinking we're going to bounce here at some point. Maybe on the 15-minute now, you take a volume spike or something that comes up, like maybe you come back and retest. We kind of formed a double bottom. Maybe you long here with a stop under the lows. That's a long at 39.20. The lows are 39.12. Maybe you put your stop a couple points under. So that's about a 10-point stop, right? And you target up here. This is 39.60. So you're literally getting 4-to-1 right here. So, and this is all based on the higher time frames. So I think planning your trades ahead, number one, super key. Second is looking at higher time frames when price gets roughly or close to your area of interest. Don't be looking at the 5-minute. Zoom out, zoom out to the 15, zoom out to the 45-minute, zoom out to the 2 hour, zoom out to the 1 hour, and see what price is doing. Because these larger candles are going to tell you where price is going to go for the next hour or two. So if you can catch an hour trend because you're looking at the hourly candles and then enter on a smaller time frame like the 15-minute based on volume, maybe like patterns like a double bottom, something like that, then that's perfect. That's exactly what you want to do. So plan your trades ahead, wait for price to get to your key levels. Don't only watch your entry time frame because that's just your entry time frame. You want to watch the larger time frames for them to give you clues as to what's going to happen next. And then take your trades off your entry time frame with a stop that makes sense and let it play out. That's it. So I also use volume a lot when I trade, volume spikes and like these lower volume candles versus higher volume. Super important to how I trade. They basically tell me when big money is stepping up or when, there's not a lot of action and, people are kind of staying out. I recommend Volume Price Analysis by Anna Cooling. Great book. One of my favorite TA books ever. So I will post a link I'll see if I can post a link in the description. If not, shoot me a DM or a message. I'll be happy to send it out. But it is a awesome, awesome book to learn how to analyze volume and correlate it to the candles that you're seeing. And it's going to help you understand what the market is doing. And I promise it'll change your trading for the better. So that's kind of on when and where to execute a trade. I did let's see, figuring out areas of interest on the day. I told you that. Um, Entry and exit signals. So signals, they can come in a variety of ways, but normally for me, to keep it super, super simple for this video, I like to, play the levels that I have, right? And play the trend that I'm seeing on the 1 hour, So if we're trending up or trending down, then you're looking for that. But what you really want to look for is volume spikes at the highs or lows of a trend. And you want to see wicks. Wicks indicate weakness because if buyers are strong or sellers are strong, there won't be wicks. They will be able to close a candle fully down or up because they've been buying the whole time and just running through the opposite side, right? So like you see, so like we get up here, so we have a key level here, and this is the 45-minute time frame. Notice that as we get up and we come up to this area of interest, right? Notice volume starts to rise. Okay, so volume is very key when entering a trade. You want to see high volume when you're getting in a trade and high volume when you're getting out of a trade. Okay, so we're uptrending. Overall, we're in a downtrend, right? We're making lower highs, not lower lows, but we're just coming down, and this looks like a descending triangle, right? And we get to this level. Notice we start to wick. So notice when we get to the bottom, there's really not a lot of wicks. We come up, it's pretty strong. There's not a ton of wicks. Next candle, there's wicks on both sides. Now you get small body, large wick, right? Notice volume is increasing. So this shows me that sellers are stepping up. Because if this was all buying pressure right here on volume, you would see a large body candle. But you get higher volume with a wick and a small body. Buyers tried to push it up and they couldn't. And so now, sorry, I'm trying to get rid of this crosshair that's getting in the way of the wicks, but so yeah, so you see volume step up. If it was all buying pressure, it would be a full body candle. It's not. There's tons of wicks on there. So you see sellers stepping up. Again, even higher volume than the previous candle, more wicks. Now you see even higher volume. This is the highest candle, and it spiked the peak. It was at the very peak, and this is the highest volume. So as we go up and momentum starts to shift to the downside, because this opened here, closed here, opened here, closed here, open, and now we closed under or right at the low of the previous candle, you can see the momentum start to shift from buying to selling. And once that happens, look, now we start to get larger body candles to the downside, right? And so you want to be getting in on these high volume candles because this is where the rejection happens. This is where sellers are stepping up and showing strength because you see the high volume and you see the wicks. So you would get short here, stop above the high, and now you want to ride it out and you want to scale out when volume picks up again. So you come back down, notice, so say you got in here, right? This is the high volume candle. Next candle is lower volume, but it's still pushed down. That's a good sign. That doesn't mean to get out. That just means that sellers are in control of price right now. It didn't take a ton of pressure to bring price down. Buyers are giving up. Now you come to this key level, right? You come down and touch it. You get a larger spread on the body and a super high volume. So this shows that there's buying and selling here, and there's buyers that are trying to buy this up. You see there's a wick down here at the bottom. This will be a good place to scale. Now, we're hoping that it's going to break. And if it does, then you ride it out. So next candle, notice that this is a larger body candle than the previous and it's on lower volume. This shows me that buyers gave up and sellers are in control. We closed with almost no wick at the bottom. So sellers sold this all the way down, all 45 minutes of it. And it didn't take a lot of pressure because volume's lower. So buyers are giving up. Now you get a little bit more of a volume spike here on a smaller body candle. Buyers kind of step up, but this is probably more profit taking because we're not at a key level. Here you get more volume on this green candle, but notice that buyers tried to push it higher, but they couldn't even close or even get above the previous candle wick. So that shows me that there's buyers present, maybe some profit taking, but overall they're not very strong. And then you get a big body candle on a big volume spike at a key level. That's where I would get out of the trade. So you took it from above the previous key level, almost to the one above it. You scaled a little bit here because that made sense because this could have bounced here. You know, this is the level we were looking for a break, but you never know if that's going to happen. So you want to take profits as you see them, but leave runners for a longer trade. And then you get out on the next volume spike on a big body candle in your favor. And you hit, what is this? 39.83 down to 39.24. So what's that? 60 points on ES. Granted, it took a while. You know, this lasted from 1 in the morning to 5:30. But in order to hit those bigger trades where you're hitting, 50, 60 points on ES, it's going to take time. So if you can read the candles and read the volume and understand what is going on based on the candles and the volume, that's going to help you a ton. So that's how I look to take entries and exits. Notice too here, you start to get wicks. So anytime you're looking to play like a reversal or like a key level bounce or rejection, you want to look for wicks at these levels. Whether it's an inverted hammer, a hammer, it doesn't matter if the wick is up or down. Wicks just indicate weakness in the current trend. So if you're trending up into a supply zone and then you start to see a bunch of wicks, there's a good chance that there's probably going to be at least a pullback, if not a reversal. See here how we came up, tested this level, started wicking. We got a big body straight into it, so buyers stepped up, buyers pushed into the key level, and now we see wick, wick, wick to the downside, wick to the upside. You get about 4 candles here with big wicks. And that shows that the trend and the momentum is shifting. So I hope that makes sense. Definitely read Volume Price Analysis by Anna Cooling. Awesome, awesome book. And you'll really be able to understand the markets a lot better. Let's see. Went over entry and exit signals based on candles and volumes. How to take short setups. So I noticed that, the volume spikes have not been the most reliable in this market. Kind of like this one here, like you didn't get a volume spike at the highs. You got the spike going into it, but then you started to get wicks. So I think basically what I've started to do is just look at the higher time frames, look at like the 45-minute, the hourly, things that will help you get a better picture of what's going on. So maybe the 15-minute doesn't give you the perfect VPA sign, as we call them, but a lot of times the higher time frames will tell you. So something like this, where this is almost like a tweezer top on the 45-minute. We push up into the area, and then the next candle closes, almost at the bottom quarter of the previous push-up candle. So this shows that sellers are there, but you'd have to be looking at this 45-minute chart in order to see that. So I think overall, just looking at higher time frames in general and understanding what the candle structure is telling you, so not just a single candle, but pairs of candles. So knowing what pairs of candles mean, I think helps a lot as well. Or even like threes. So like this would be an evening star candle. You get this push up, you get this low volume, just kind of like pullback. And then once you break the low of this, that's a signal to go short, right? So knowing things like that, tweezer bottoms, tweezer tops, um, dark cloud cover, just different candle patterns. So if you don't know those, I would definitely look those up. But I think overall, what's been helping me take trades in this market, even though VPA signs on the 15 and 30 haven't always been accurate, is looking at these higher time frames. So even here too, on the 45, you do kind of get like a tweezer top, but you also get this spike of volume as well. So this kind of shows that buyers are exhausted and they're pushing up. So we're probably going to see some sort of pullback, maybe even a reversal, and then you do get the drop. But then you also get this high volume hammer right here on even higher volume, and you could definitely take that long as well for the next 45 minutes for, this is another like 20 points. So that's what's been helping me the most. I did get a question on why draw levels if I'm trading zones. So these levels are just inflection points in the stock market or in the market that you're trading. They're areas where price tends to turn around at. So to me they're not the same as supply and demand zones, but I think they're just as important. And what I like to do is I like to take a trade that has a zone and a key level. If I can't get a zone that's near a key level and it's just floating in the middle and it's small and weak, then I won't take it. But if you get a zone that is at a key level or at a trend line, because I think these yellow trend lines are just as valid as any horizontal support and resistance level, then that also tells me that it basically just gives me more confluence on the trade, because when you're trading, you want to put everything in your favor that you can, right? So, like here, this is a really nice downtrend right here, and we hit. Notice that this was probably a supply zone right here. You got a green basing followed by a big red drop, right? And this corresponds to a downtrend that we've seen. Peak, peak. Now where's the next peak? We peak right at it. I probably could adjust this slightly. It might be better on a lower time frame. But we peak at it. So we're hitting a trend line right here and a very strong supply zone. See this big drop after that? That indicates there's really strong sellers and a lot of sellers in this area. Align that with a trend line and you get a high quality area to take a trade. So that's why I like to draw trend lines and levels, because if I can line up a zone with a level and a trend line or one or the other, then that gives me just an extra confluence to take the trade. So I highly recommend drawing support and resistance levels on your chart and then trading those supply and demand zones at those levels. That'll give you an extra confirmation for your trade. As long as you're trading with the zone or with the trend, that'll help you a ton. So notice here too, on this trade, you hit resistance as well at 39.26. So you get a zone here from the previous area. You get a trend line that has been very strong, and you get a resistance area. On top of that, this is even now you get a pattern too. What do you see here? Double top. Double top at a zone, at a key trend line, at resistance. You break the neckline right here. This is the neckline right here. And what happens? You get a massive drop. Same thing here. You have a trend line up. What happens once you break it? You get a huge flush. So once the trend line that has been holding this whole time for, 3 weeks breaks, you get a big move. So that is why drawing support and resistance along with supply and demand and trend lines is very important. in my opinion. It just adds confluence to the trades that you're looking to take. And I think that's most of the questions I got. Oh, I got one on where to place a stop. So for me personally, if I get a signal candle at an area of interest, say I wanted to short this zone up here, this area, and I saw these double wicks, I will always place my stop loss above my entry candle. So if this is my entry right here, usually I give ES 10 to 15 points. So this is a perfect example right here where we got a 30-minute supply right here. Came up, hit this zone, right? And on the 15-minute, we're taking entries off the 15-minute. I would short this candle right here after we see double wicks up top, showing that sellers push price down twice. I would set my stop loss at the very top of the zone for 10 points, and I would look to target at least 2 to 1. So here's your that's your 2R trade right there. If you can push it a little further, you can get almost 3R on that. But always look for 2R, so you're at least looking for 20 to 30 points on ES and 10 to 15 points on your stop. But overall, if you get a signal candle, you want to place your stop above or below for longs of that candle, and that's where I place my stops. And I do not recommend putting it, one tick above the wick. I would give it at least 3 to 5 points, maybe, if you can, above the wick, because lots of times they will run stops by a tick or two or maybe a point and then reverse price. So like here's a good example, like if you took this candle long and you put your stop right here, you would have got stopped out on just this little wick right here. So I would recommend placing it above or below the 15-minute candle that you enter on and giving it a handful of points on either side so you don't get stopped out by those little stop hunts. And book recommendations. So one of my favorite books is by Brett Steenbarger, and it's called The Psychology of Trading. Let me see if I can look these up really quick for you. Go to Amazon. So, Psychology of Trading. So, this is one of my favorite books right here for psychology, which trading is literally like 80 to 90%. So, I would really focus on that part of your game. I think too many people focus on TA and then they wonder why they're not making progress. This is a great book to kind of get you in the right headspace and kind of teach you not only to just not have emotions, because I think that's not really possible in trading. You're human, you're going to feel fear, greed, all of that. But this book basically teaches you to be aware of them and then use them as cues and data points in your trading. Another great one, Mental Game of Trading. Highly recommend that book. We're actually reading that for our book club in the Discord starting this week. Super great book. It also teaches you to not just be a robot, which I believe Trading in the Zone kind of says that. Basically, just be a robot, don't have the emotions or anything like that, and just take a trade. I think that's kind of old school. I think it's very hard to not have emotions when money's on the line like that. But you should be in control of your emotions. So if you're trading so big that you're sweating and you're worried you're going to lose a ton of money, you need to size down. And sizing down will fix like 90% of problems in trading. So I recommend just doing that. Just kind of my 2 cents. But going back to the books, The Psychology of Trading, awesome book. Highly recommend. The Mental Game of Trading, another great book. Brett Steenbarger also has a few others. The Daily Trading Coach, another great psychology book. I have a couple others. Let's see. I do like the Market Wizard series. So, Market Wizards, another great book. Unknown Market Wizards, recommend that. I've not read the hedge fund one, but I do like both of those. Also, let's see. Oh, what's the one? Reminiscence of a Stock Operator. This is more of a story, which I'm not really into stories. I like more like self-help, like stuff that's going to help me. But Reminiscence of a Stock Operator, super great book. It's a great story about a trader back in like the late 1800s, early 1900s, made millions of dollars back then, lost it all, got it back. Awesome story. There's definitely good little tips and tricks on trading and just overall like general principles that I would recommend. But very entertaining book, and highly recommended. What else do I got? Let's see. Sorry, I'm like looking at my bookshelf right now. What I have: Mental Game of Trading, Psychology of Trading, The Daily Trading Coach. Trading in the Zone is pretty good too. I think everyone knows that. One Good Trade is actually really good as well. One Good Trade, that's another good book. Kind of goes over like how the prop firms recruit people, what they look for, and then kind of goes over, general principles for trading as well. But it's based on like the story of Mike Bellafiore and SMB Capital and all that. But that's another good book. Um, yeah, that's about it. Those are kind of the ones I have. Um, Technical allow, and then this is a decent TA book as oh, let me see, Volume Pro. Well, let me go over the one I recommended earlier. Volume Price Analysis by Anna Cooling, right here. Awesome book. I have it in an ebook. If you want it, just shoot me a message on YouTube or Instagram or Discord or whatever, and I'll give it to you. And then another good technical analysis book that I liked was Technical Analysis Masterclass. This book. This one's pretty good too. But this is more like TA, which you can find a bunch of TA. And also, if you take my class that I offer, the Van Man's mentorship, I can teach you all the TA that you'll ever need. So, but yeah, so I think that's about it. I do want to say, go to the Instagram of the page for Black Friday. If you go to the firm trading and go to our link tree, my mentorship and my class, I'm going to do a 50% off coupon for this. So instead of $400, it'll be $200. And this is going to tell you exactly how I trade. So it's going to be just way more in depth of what I just went over, So there's 46 classes. One goes over TA, goes over candles, support and resistance, market structure, patterns, trend lines, indicators that I use, supply and demand, how to draw them, how to validate them, goes over volume analysis, effort versus result, the volume of trends, reversals or pullbacks, taking trades, basically a whole trading pre-trading routine on what to do, risk management and psychology, and then a wrap up, and then a miscellaneous section going over how to use Tradevate, how to use TradingView, how to look at top stocks, all that. So I'm going to do a 50% off coupon for that, $200. You'll have access to it forever. I do add courses, and if you are stuck on something or think something needs to be added, I'll definitely add to it. So this course isn't stagnant. I can add more lectures to it. So yeah, thank you guys. I know this is a really long video, so I apologize. I hope you got a lot out of it. But if you haven't, definitely check out our link tree here. I'll post the link in the comment section or the description section. But we have 3 different tiers of our Discord: the trading floor, the boardroom, and the executive suite. We have different social medias and then partnerships here. So would love for you guys to check out the Discord. You get a week free if you sign up for the trading floor or the boardroom. You can cancel it after the free week. You can even go into the trading floor, have it for a week, cancel it, go into the boardroom, have it for a week, so you can get 2 weeks free. I think we're going to be doing also a Black Friday sale on the boardroom and the trading floor. I'll need to talk to my partners about that, but yeah. And then the executive suite grants you one-on-one access with me and the other admins of our Discord once a month, where we can help you become a profitable trader. So if you stuck around for all of this video, I really appreciate it. I know it's super long. I hope you got a lot out of it. And if you want me to do more Q&A and answer questions, I would definitely love to. So thank you guys for your time, and I'll let you go. Have a good one.